Hi guys, today I just need to take a look at dollar index, what we expect in the coming week regarding the dollar index. So the reason why I'm going to do only this asset, this is for the mentorship group. The reason why I'm only gonna do my analysis on the dollar index is because I need people to do their own work. I need people to be in a position to do the analysis on the other assets that we trade along dollar index. I need people to be in a position to make a decision by themselves when it comes to, say, trading Euro USD, USD JPY, USD CAD, AUD USD, mainly all the major pairs. So that's why today I'm going to give you only the analysis which is focusing on dollar index. So yeah, looking at it from last week, we were expecting this low to be cleared. We were expecting bearish moves, but we can clearly see that we had a bit of a correction to the upside, which is what we were expecting. As last week was NFP, and the NFP came out with a very good number. That's when you see dollar having a bit of a correction to the upside and erase some of the losses that it encountered in the last week of July. So the first week of August, we have seen dollar trying to erase some of those losses, but not by much, you see. So now when we look at price, when we look at this structure here, right, you see the market structure for dollar index. The moment you look at a chart, I'm always saying this, be in a position to read what price action is telling you. Clearly you can see we've got this low here, right? Now we need to define where are we going to be trading, what's our range, right? We've got this low which was formed last week, and then we've got this old low here, right? You can clearly see we've got that old low, right? That is also critical. And then currently we have the high for August. Those 3 points, they should give you a structure which you have to focus on, and you can clearly see you've already defined the relative strength for the monthly chart. We had an old low here, we had a higher low, and then we have another lower low. That's a downtrend, right? Everyone now knows dollar is not performing very well. It's one of the weakest currencies. Euro and the British pound, they are one of the strongest. So now when you look also on the structure, right, the moment you look on the structure, the market structure, this structure, you see, you should be also in a position to read what's happening, right? Like now I can be in a position to highlight that we already have a fair value gap. You see, this is our last down candle, right? There, we've got our last down candle. But now if you look at this down candle, it's coming in a bullish order block. We've got this last down candle with a big body candle. This is our bullish order block, right? And we've got a fair value gap here. You see, an area whereby price hasn't traded back to. And now the confluence that it has with this bullish order block is of very good significance. It's a good confluence for you to consider, since we all know that dollar is taking a hit at the moment. Yes, we are going to see a bit of correction to the upside, especially if the stimulus is passed in the United States. But remember, the Federal Reserve and the Treasury, they can only keep stimulating their economy to a certain extent. They can't keep up with that. So now I'm going to mark out those points that I've highlighted so that we get to define exactly our market structure, if you see the current month, the low is coming in at 92,465. Then if you look at the opening price of our order block, it's coming in at 91,900. Right, let me highlight the low of our current month, which is coming in at 92,465. So we've got the low coming in at 92,465. That's the current low of this month, right? Where I'm going to expect liquidity to be drawn to. Remember, you have to be in a position to highlight where liquidity is going to get drawn to. Where does the market go to in order for it to create liquidity? And then we've got this old low, right? And then we've got this month's current high. Of course, probably my price are not going to be precise to the pip. And then we also have this down candle here, and its high is coming in at 90.88. This candle's high is coming in at 90.88, 90.88. Right, this then defines our fair value gap. So we've got our fair value gap here. You won't be shocked that the same analysis or the price action that I'm marking here, if you go to Euro USD, they're clearly identical, right? So we've got our fair value gap to the downside, into the upside. We've got this fair value gap in here, but that's a bit of a stretch because of this big down candle to the downside. So I'm expecting market to balance the supply. You see, we've got market offering sell side liquidity, so we had an imbalance which was created here, right? We had an imbalance of which I'm expecting price to trade to the downside. That means long term wise, I am of the notion that dollar is gonna keep getting weak all the way probably to 90, right? That's my long term forecast on dollar index. Yes, in that long term forecast, I'm not saying we should not consider long positions or a bit of a correction to the upside. So with that said, this is my monthly analysis on dollar index. So now I'm gonna go to a weekly time frame, right? Once I get to a weekly time frame now, you can already see market has shown us that it really wants to trade to the downside. You can see last week what happened with last week. We almost closed at its opening price, but it cleared the sell stops to the downside, right? Market cleared the sell stops to the downside. So now I need to highlight the old low, last week's low. We've got sell stops, right, on last week's low, and then last week's high, we've got the buy stops above, right? We've got buy stops above that price area. You see, let's not forget this range here. That's our fair value gap, right? I'm just gonna switch back to a monthly chart, and then let me grab my rectangle tool. You can see what I'm doing here. I'm just defining my order block, the last down candle. You see this candle here? This is our bullish order block. So it's in this area here where we're going to be hunting for long positions to the upside. You see, I just switched back to the monthly so that you guys can see clearly. So now I'm gonna go back to a weekly time frame. So now you can see where the fair value gap is coming in. It's coming in at a higher time frame demand zone, at our bullish order block. So I'm expecting price to, in the coming 2-3 weeks, or by September, I'm expecting price to dip down into our OB, bullish order block. You see? So now it means we need to be looking for premium areas. You see, we need to be looking for bearish order blocks, bearish fair value gaps, bearish mitigation blocks, for us to take the market to the downside. You see, but mostly I advise you guys to focus on bearish order blocks and supply zones. They all come at the same price area. Once price trades back to a bearish order block, make sure you're hunting for short entries to the downside. If you are to take a long position on dollar index, make sure your target is the closest or the nearest bearish order block that you can find on the time frame that you are trading on. So now I'm going to go on to a daily chart. Now this is where things become interesting now. So now on a daily chart, we can clearly see NFP, we had a bit of fight back on dollar index, but it's not much. We only fought back into this rejection block. Let me zoom in. We only traded back into this rejection block. You see this? This is where we traded to. So the fact that we couldn't clear up this high, expect market to be drawn to that high, because there's buy stops. You see, there's buy stops there. People who shorted dollar index, their stops above here, right? So then you have to expect market to be drawn to that area, right? You expect market to be drawn up here before we see probably another leg to the downside, which is same as this guy. You see? So that's what I'm expecting on dollar index. So now when we're on the daily chart, you can clearly see we've got a rejection block, and you see this up candle here, this up close candle. This now becomes your bearish order block. You see, this last up candle, this is your bearish order block, and the wick becomes your rejection block. So now let me just give that a different shade. Let me give this a different shade. So you can clearly, we can see you have got our rejection block. So this is a bearish rejection block, right? This is our bearish rejection block, and then we've got our bearish order block here. You see, we've got our bearish order block. So now if you are to take long entry, so this will be your target. Remember, when you're going along on dollar index, it means you are shorting Euro USD and you are also long on USD JPY. So now you can see those areas that I have defined, these two, bearish rejection block and the bearish order block. And remember, we also have buy stops here, up here. It's only that because I'm not zoomed out quickly so you can see. Oh, there's the buy stops that I had put. You see, we've got buy stops above here, right? And we have our sell stops below, right? So my analysis is telling me that we are going to see dollar gaining a bit, especially if the stimulus is passed. Then I would expect price to come into this range before we see further downward movement. So now this is a daily chart. I'm gonna go on to an H4 chart so that you guys can see clearly what we are talking about here. So now we're on an H4 chart. So as long as price is trading in this range, you see, in our bearish rejection block and in our bearish order block, as long as price is trading in this range, ideal trades to take will be short trades on the dollar index, long trades on Euro USD, short trades on USD JPY, etc. on the other assets, because we are really expecting dollar to crash out, right? We're expecting dollar to crash further down to the downside with a long-term target of this fair value gap to be closed. So let me go on to a hourly chart. I'm sure you can now see how the price action is now exactly panning out. You see here, these two equal highs. It's gonna be very interesting. Market is not just gonna pass through and clear up these highs and go to the moon. You see, it's gonna offer you good chances for you to trade to the downside. And once that is happening, if I come to my Euro USD and go straight to an hourly chart, you can see we've got two equal lows, right? And it's in this area already. I've done an assignment on this, guys. In this shaded area, this is our daily bullish order block. You take it, you're taking market to the upside. See, that's already 20 pips that it offered there. So dollar index, I'm still bearish on dollar index. I am expecting market to trade lower, right, due to the fact of the monthly strength showing us that price will trade lower. So this candle here, the current monthly candle, that is August, it's not going to be a surprise if it closes with a strong bearish to the downside, big bodied candle to the downside. If that does not happen, then expect it to be probably a new bearish order block, because it will only close bullish. If it closes bullish, then it's a complete up close candle where we should be hunting for short trades to the downside. So probably it will close like, if it closes like this, then it's in this candle that we have to look for market to trade into this range here, which is our monthly order block. You see, this is our monthly order block. So I hope you guys have understood perfectly. So this is our monthly bullish order block where we're going to be hunting for long positions. And take note, this is now tendency for dollar index. We normally have a low formed in September. FYI, we normally have a very low, a good low that is formed in September in most cases. If you look at the seasonal tendencies of dollar index, you can see here that's 2017 we had a low, and then you can see here 2018 we had a low formed before market rallied. 2019 the low was only formed during December, and then if you look back, 2016 we had a low formed, then market eventually rallied to the upside. Then if you also look in 2015, the low actually came in August before we see further pushes to the upside. So take note of the current price action. August and September, we could probably see a new low being formed that is going to be our base for a recovery on the dollar index. So yeah, that's pretty much about it, guys. I hope this has been clear and insightful to you guys, and I wish you good luck and happy trading in the coming week. Thank you.